Hello students, in our previous session we have started bills of exchange and we have seen how to calculate or how to find out date of maturity. Now in this session we will be discussing some terms. Okay, now first term that we are going to discuss is bill at sight. Now bill is nothing but your bill of exchange. Okay, now let us see. In a bill of exchange, the expression means if in a particular bill, if they mention at sight or on presentation. Okay, if these two phrases are written on that bill, then it means that that bill becomes payable on demand. Means if no time for payment is mentioned in the bill, it is payable on demand. Yesterday in our specimen of bill of exchange, we have seen that it was written 2 lakhs to be paid after 2 months. Okay, but in certain cases what they do is that they don't mention 2 months or 3 months. Okay, they will simply just write at sight or on presentation. So in that case, what is meant by these phrases are that this bill will be payable on demand. Okay, the bills payable on demand become due as soon as the bill is presented for payment. Suppose if I got a bill, okay, and in that bill it's written at sight or on presentation. So as soon as I show this bill to the payee, okay, then at that case what will happen is that the payee will be liable to make the payment on that exact moment. Okay, there will be no days of grace. Okay, earlier we saw that after 2 months we used to add 3 days of grace, but in this case or bill at sight there will be no such thing as days of grace. Okay, then another term is bill after date, where a bill is payable at a fixed period after date. The period begins to run from the date of drawing the bill. Okay, then we will add 3 days of grace. Suppose let's say example. Okay, and here one example is given that a bill of exchange dated 1st January 2015 means suppose I am the drawer of bill. Okay, and I drew that bill on 1st January 2015. Then I put 2 months period on that bill and I wrote after date. Then I sent that bill to my customer. Okay, suppose Drawee. Okay, I sent that bill to Drawee and it took some time to reach to him, and then after receiving, he accepted that bill on 15 January 2015. So in that case what will happen is that the due date of the bill will start counting from 1st January, because I drew that bill on 1st January, and it will not start counting from 5th January because it's written after date. That this particular date means this 1st January, the date on which the bill was due. Okay, so when we count from 1st January for 2 months, it will be 1st February, 1st March plus 3 days of grace, 2nd March, 3rd March, then 4th March will become due date for this payment. Okay, now there is another term, bill after sight. Since this is not included in your syllabus, but still you can understand what is meant by bill after sight. Now the expression means if in a bill the word after sight appears, then in that case what will happen is that, let us take previous example. I drew a bill on 1st January 2015. I sent it to my drawee. Okay, then he saw that and accepted it on 15 January. Then since it is after sight, means after seeing and accepting this bill, he accepted it on 15 January 2015, means he saw that on 15 January and accepted it. So my date will be my period of that bill will start counting from 15 January, not from 1st January. Okay, that is the difference between bill after date and bill after sight. In first case, that is bill after date, we used to take date, that is the date of drawing that bill, and we used to start counting our period from that day. But in case of bill after sight, we used to start counting the time from the day on which the drawee accepted that bill. Okay, that is 15 January. So when we count from 15 January 2 months, it will be 15 February, then 15 March plus 3 days of grace will be nothing but 15 March plus 3 days, 16 March, 17 March, 18 March. So our due date will become 18 March 2015. So don't get confused between bill after date and bill after sight. You just have to keep in mind that bill after date means the date on which the bill was drawn, and bill after sight means after seeing the bill by drawee or the person who will be paying that amount. Okay. Now when we talk about accounting treatment, okay, what we are supposed to do in bill of exchange, we will see first two terms, that is bills receivable, short form is BR, B/R, then bills payable or bill B/P. Okay, now let us understand what is meant by bill receivable and bill payable. Now the person who is entitled to receive money draws the bill. Suppose if I sold goods to Mr. A, okay, then I will be the one who will draw the bill. I will make a bill, I will sign it, and then I will send it to Mr. A. Then he will accept it, then he will send it back to me, okay, that he have accepted the bill and he had sent me back. So in this case what happens is that I am the seller of goods, so I will be receiving money based on that bill. That bill is the proof that Mr. A is supposed to pay me or is liable to pay me a certain sum of money after a particular period of time. So for me that bill, okay, that piece of paper that I made and I sent to Mr. A, that bill is bill receivable for me, because on the basis of that bill I will be receiving money in future. But at the same time, that bill, that exact same paper will be bills payable for Mr. A, because based on that paper document or paper instrument, he is going to pay after a certain period of time. So you can say that a bill, that same exact bill, what is bill receivable for one party will be bills payable for another party. Okay, so for me, since I am the seller of goods and I will be receiving money in future, that bill receivable is nothing but my asset. Okay, and in the same way, that document or that paper, that bill will be nothing but liability of Mr. A. That is, it will be for him, it will be bills payable for the acceptor, because he is accepting that bill to pay money. Okay, now there are different way in which we can use a bill receivable. Okay, now we are talking from bills receivable perspective. Okay, we are the person who drew that bill and we are going to receive money from the payee. Okay, no, sorry, payer. Okay, now let us see a party who holds a bill receivable. Means for us, let us assume that we are the party who is holding a bill receivable and we will be receiving money in future. Okay, now how can we use this bill receivable? We can use it in 4 different ways. Now the first one is he may keep it till the date of maturity. Okay, now obviously that bill will contain certain period of time. Okay, after that particular time only we will be liable to receive money. Okay, so what I can do is that I can just keep that paper with me till the date of maturity. Okay, or he may discount it with the banker before the date of maturity. Means instead of waiting for that, suppose I am having a bill receivable and maturity date for that bill receivable is 15 August. Okay, so now is January and that maturity date is on August, 15 August. Okay, but I need money, I have some urgent work. Okay, so what I can do is that I can simply take that bill to the bank and I can discount it, and before date of maturity I can take out money or I can take money from the bank. Okay, this we will discuss in detail later. Okay, so instead of waiting for date of maturity, I can take that bill to the bank and I can discount it. Means suppose if the bill is of 1 lakh value. Okay, the value of that bill is 1 lakh. So instead of waiting till August I took that bill, I gave it to the bank. Okay, then bank, what they will do is that they will not give me full 1 lakh. They will take out some money, like if the rate of discount is 10%, then they will take out 10% of this 1 lakh. So 10% of 1 lakh is 10,000. So they will deduct this 10,000 from 1 lakh, and the remaining 90,000 they will give it to me. Okay, so that is meant by discounting. Okay, discounting it with the banker. The next, third way is he may endorse it to some other party before the date of maturity. Now, I have a bill receivable and its value is 1 lakh. But in the same time, I owe someone 1 lakh. I have to pay 1 lakh and I don't have cash with me now. So, in that case, what I can do is that instead of paying cash, I can simply just give this bill of rupees 1 lakh to that third party. Let's take example, let's say Mr. X. Okay, I have to pay Mr. X rupees 1 lakh. So instead of giving 1 lakh in cash, I can simply just give him this bill receivable of 1 lakh. So that is nothing but it means like I have endorsed it to Mr. X before maturity date. So on maturity, what Mr. X will do, he can simply take this bill to the party or the person from whom I was supposed to receive 1 lakh at the first place. Okay, then the last is he may send it to his banker for collection. Suppose I have account in HDFC Bank. Okay, so instead of keeping this bill receivable of 1 lakh with me, what I can do is that I can send it to my bank and I can instruct my bank to collect it after date of maturity. Okay, don't instead of collecting now, I have given them instruction that to collect that bill amount on date of maturity. So that is meant by I can send it to the banker for collection after date of maturity. So these are the 4 ways in which we can use our bill receivable. Okay, now let us discuss the first point or first use, which is when the bill is retained. Means keeping by the drawer in his own possession till the date of maturity. So in such a case, the drawer will himself receive the payment of the bill on the date of maturity. So after on the date of maturity, I myself will receive the payment of the bill. Okay, because I retained it with myself, I kept in my possession till the date of maturity. So in that case, obviously there are some transaction taking place. Okay, when we sell goods, when we issue or when we draw bill, when we receive money on showing that bill, there are some end transaction taking place in our business. So those transactions will need entries in our books. So in bill of exchange, what we will do is that we will pass journal entries in the books of the parties related with the transactions. Okay, in this chapter we will do nothing but we will pass journal entries in the books of the related parties. Now since in this first use, okay, only 2 parties are involved. Okay, let's take example me and Mr. A. Okay, I am the person or I am the drawer of the bill. So Mr. A is another party. So transaction is taking place between me and Mr. A. So both of us will make relevant entries in our books. So what are the entries that both of us will make in our books are that we have to see in this chapter. Okay, since only 2 parties are involved in this kind of use, we will pass journal entries only in 2 people's book. Okay, now this is the main thing. Okay, this table is very much important. Now these are the journal entries. First party is drawer, that is me. Okay, here they have written suppose X. Okay, let's take example of me, or you can take example of yourself. And another is drawee or acceptor of bill. Let's take example as Mr. Y. Okay, now let us see the transactions that took place between Mr. X and Mr. Y. Now first what happened is that Mr. X sold goods to Y. Okay, so let's think from X point of view. Okay, now X he sold goods to Y. So That means I am selling goods to Mr. Y. So what will be my journal entry? Y account debit to sales account. Okay, because in bill of exchange we always deal with credit sales. Okay, it is not related with cash sale, so keep that in mind. So in book of Mr. X, he will make journal entry for selling goods to Y as Y debit to sales. Okay, now imagine yourself as Mr. Y. You are Mr. Y and you purchase goods on credit from Mr. X. So what will be journal entry in your books? It will be purchases account debit to X, because you purchase goods on credit from Mr. X. Okay, then this selling transaction is over. Then the next transaction took place is that when X received a bill duly accepted by Y. Now after selling goods by Mr. X to Y, what he will do is that he will draw a bill. He will send it to Mr. Y, and after accepting, Mr. Y will send back that bill to Mr. X. That is the next transaction taking place. Okay, drawing of bill, sending that bill to Mr. Y is not transactions. Okay, so for those things we will not make any journal entries, but we will make journal entry when Mr. Y accepted that bill and he sent back to Mr. X. Okay, now when Mr. Y accepted that bill, that paper or that bill became bill receivable for Mr. X. So when he received that bill receivable, it is nothing but asset that came inside his business, and according to real accounts rule, debit what comes in. So we will debit bills receivable account, and who is the sender? Mr. Y is the sender, so we will credit his account. Okay, and in narration we can write acceptance received. That means as Mr. X, we received acceptance from Mr. Y. Now think from Mr. Y's point of view. He is the one who sent that acceptance, so it is for him that bill is bills payable. Okay, it is liability, so it is going out from his business, so that will be credited. And who is the receiver of that bill? It is none other than our Mr. X. So debit the receiver, that's why we debited X. And since bill is going out from the business, so we credited bills payable account. And in narration we have to write acceptance given. Either you can understand these transactions, or you can just either you can understand these journal entries, or you can by heart it. Okay, I will recommend if you try. It's a little bit confusing, but try to understand the transactions and their journal entries. Okay, because in exam they will not going to ask you exact question as your textbook. They will give questions from somewhere else. So in accountancy it is very important for you to clear your concepts. Okay, then after this transaction, the last transaction is that when the bill is retained by X, that means he kept that bill with himself till the date of maturity, and on that date of maturity Y paid the amount of bill. Okay, so we from transaction number 2 till transaction number 3 we have to be very careful while finding out the date of maturity, because in journal you can, if you remember, there is first column date column. Okay, in that case the last date on the maturity date which the transaction took place, we have to mention that date. Okay, that is why we saw in illustration number 1 and 2 how to calculate or how to find out date of maturity. Okay, so on date of maturity you will write date in your date column of journal, and then what will be the journal entry? Now first we will see from X perspective. Okay, on this maturity date, Mr. X, what he did is that he received cash from Mr. Y. So bank account will be debited, because in bill of exchange cash is not paid. Okay, money will be received through bank account, so money is coming inside the bank account, so our bank account will be debited, and we are receiving money after giving that bill receivable to Mr. Y. Okay, on the date of maturity, remember that we will give that bill receivable to Mr. Y, we will show it to him, and after seeing that he will make the payment through our bank account. Okay, so in narration what you have to write is that the amount of bill received on maturity. Okay, now from X point of view, our transactions or our recording of transactions are over. Now let us see from Y's perspective. Now on date of maturity, what he will do is that he will receive bills payable because he is receiving that bill from Mr. X. Okay, and after receiving that only he is making payment through bank. So bill payable is coming inside his business. Since he is receiving, it is coming inside his business, so we debited that account, and we will credit bank account because money is going out from our bank. Okay, so we credited bank account. The amount of bill paid on maturity will be written in the narration, or you can write it here in your own words as far as meaning is clear. Okay, now these are the important journal entries that you have to keep in mind, because these are the things that we are going to solve in the questions. Now let us see one illustration. Now illustration number 3, let us read the question. On January 1, 2019, X sold goods to Y for 50,000. Now this is our first transaction. Okay, then on the same date, X draws a bill on Y for 50,000 due after 3 months. Remember, while drawing the bill, there will be no journal entry. Okay, Y accepted the bill and returned it to X, but there will be journal entry when another party accepts the bill, and after accepting, when there is return it to the drawer. Okay, that time there will be journal entry. Now X retained the bill till due date. He did not do anything with that bill. He just kept it with himself till the maturity date or due date. Then on due date, what happened is that Y made the payment on that day. Okay, so till here we have information. Now let us see what this question is asking us to do. Pass journal entries and prepare necessary ledger accounts in the books of both the parties. Now both the parties are X and Y. Now in this question they have asked us to prepare make journal entries as well as to prepare necessary ledger accounts as well. Now let us see. First we will give heading as journal entries in the books of X. In bracket, for your convenience, you can write drawer. Okay, he is the one who is selling goods, he is the one who is drawing the bill. Okay, now first transaction took place on 1st January 2019. So in the date column, first we will write January 1. Okay, now you can do what you can do is that you can make journal for Mr. X in one page, then after leaving some space you can prepare journal for Mr. Y, and you can pass journal entries simultaneously in both the parties' books. But I will recommend that first you complete one party, then you move on to the next party's journal. Okay, then you will not get confused, but it's not up to me, it's according to your convenience. Whichever method you feel comfortable, you can take that. Okay, now first transaction took place on 1st January 2019. That transaction was X sold goods to Y. Now we are preparing X's book, so for us, think yourself as Mr. X. You sold goods to Y for 50,000. So what will be the entry? Y debit to sales account 50,000 rupees. Okay, now this transaction in the book of Y you can write as purchases account debit to X, because now you are Mr. Y, or you can write acceptor, and you are purchasing goods from Mr. X. So for your book, the journal entry will be purchases account debit to X, rupees 50,000. Okay, now the next transaction will be when Y sent acceptance to Mr. X. Okay, so on the same date itself, on January 1st, Mr. Y accepted that bill and sent it back to Mr. X. So journal entry in book of Mr. X will be bill receivable account to Y, because he is receiving bill from Mr. Y. Okay, Y is the giver, so his account will be credited. The value will be same, 50,000. Then for the same transaction in the book of Mr. Y, we will write X is the receiver, and what we are giving is we are giving bills payable, so it is going out from our business, so it will be credited. Okay, amount will be same, 50,000. Then the last transaction took place on due date. Okay, so first let us try to find out due date. So the bill was drawn on 1st January for 3 months, so from 1st January 3 months will be 1st February, 1st March and 1st April, plus we have to add 3 days of grace, that is 1st April plus 3 days, 2nd April, 3rd April, 4th April. So our due date will be 4th April. So here you can see we wrote 4 April 4. Okay, so on 4th April what happened is that Y meets the bill, that means Y paid the full amount on April 4th. So when Y made the payment in book of X, means I am the receiver, on April 4th I received 50,000 from Mr. Y for the bill. So what I will do is that I received money in bank account, so bank account will be debited, and in exchange of what I received money, bills receivable. Okay, after giving that bill receivable to Mr. Y, he paid me 50,000 in my bank account, so I will write bank account debit to bill receivable account rupees 50,000. The same transaction will be recorded in books of Mr. Y, and for him it will be, date will be same, April 4. Bills payable, he is receiving bills payable. Okay, remember what bill receivable was for Mr. X, that same bill will be bills payable for Mr. Y. So in book of Y you cannot write bills receivable. Okay, you have to write bills payable. So bills payable account debit to bank, because 50,000 was deducted from our bank account and we made payment to Mr. X. So we will write X means 50,000. Okay, now journal entries finish. Now remember, in bill of exchange you don't need to find out total of journal. Okay, if you remember, in journal we used to find out total of debit column and credit column, but you don't have to do that in bills of exchange. Okay, you can simply just make journal entries and you can keep it as it is. Now next, the question, they also asked us to prepare necessary ledger accounts. So ledger accounts, I hope it will be very easy for you, as we have already saw how to prepare ledgers. Okay, now ledger of X, that again you have to make for two parties, because we have both the parties. First let us see Mr. X ledger. Okay, now first journal transaction, first account is Y, so we will prepare Y's account, and that we will write to sales account. So to sales account rupees 50,000. Okay, now since this is Y account, let us see is there any other journal entries related to Y. Yes, the second one. So in second one we are dealing with this Y, to Y account. Okay, since Y is written in the credit side, so we will put buy in front of this and we will write buy bills receivable account 50,000. So we don't have any more Y related transactions. Okay, then this one finish. Okay, let me put mark in here. The next is our sales account, so we will prepare sales account. We will put buy in front of Y and we will write in here buy Y 50,000. Now do we have any other sales related transaction? Nope. So next account is bills receivable account, so we will prepare bills receivable account. Then we will put 2Y 50,000, 2Y 50,000. Then next let us see is there any other journal entries related with bills receivable account. Yes, here it is. We will put buy in front of bank and we will write buy bank account rupees 50,000. Okay, finish. Then then after preparing bill receivable account, Y account we already prepared. Now bank account we don't need to prepare, because if you remember in cash book we used to prepare cash column and bank column. So in ledger we don't prepare bank account and cash account. Okay, then for Mr. X ledger accounts is finished. Now let us focus into Mr. Y's ledger accounts. Okay, after this journal transaction, what we will do is that we will see first account is purchases account, so we will write purchases account. we will write 2x 50,000. Then next, do we have any other transactions related with purchases account? No. So next we will move to X. Now we will prepare X account. We will put buy in front of here, and we will write buy purchases account rupees 50,000. Then next we have X related transactions on January 1st itself to bills payable account, so we will write to bills payable account 50,000. Then since we don't have any other journal transactions related with X, we will move to our next ledger accounts. Next ledger account is bills payable, so we will prepare bills payable account. First transaction is this one, so we will put buy in front of X, and we will write buy X rupees 50,000. Then next bill payable related transaction took place on April 4th, so we will write to bank account in here, April 4th to bank account rupees 50,000. Then again next we have bank account, so we don't prepare bank account in ledger, so this question is finished. So like this we have to prepare bill, in bill of exchange you don't have to do anything, you just have to pass journal entries, and if question asks about ledger, then you have to prepare ledger. Okay, since they haven't asked us to prepare trial balance, we don't need to balance the ledger accounts. Okay, now let us move to the next illustration, that is illustration number 4. Now let us see the question first. On January 1st 2019, Shankar purchased goods from Parvati for 8,000 and immediately drew a promissory note. Now since promissory note is not included in your syllabus in this year, so just imagine it as bill of exchange. Okay, so Shankar, he purchased goods from Parvati for 8,000 and immediately drew a promissory note in favor of Parvati. No, wait, sorry. Since promissory note is not included in your syllabus, you don't need to do this question, because promissory note is drawn by not the seller but by the purchaser. Okay, and since it is totally different than bill of exchange, so we will just skip this topic. Okay, so I hope you understood how to solve bills of exchange question. Okay, it's nothing, you just have to keep in mind about the dates, okay, on which date the transaction took place. Then you have to pass journal entries, and if asked in the question, you have to prepare ledger accounts as well. Okay, now this was the first use of bill of exchange. That means when the drawer keeps bill with him till the date of maturity, and on the date of maturity when the bill amount was met by the payer. Okay, so for this session we will wind up here. Thank you.